Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, April 24th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. You'll notice right now the ES is trading within a very narrow range here to begin. The week, 55% of average range, just 22.75 points of range so far. You'll notice here how narrow the ranges have gotten at these highs. If you just do a quick comparison to this price action right here and just look to the left, last time we were at these levels, the price ranges were much wider, much more volatility, and that's clearly evident at the bottom here, down here as well, as the average daily range right now is 41.5 points. Back here, the average daily range was 72 points, 71 points, 72.6. So a lot higher ADRs back here. So the volatility has quickly dried up on this edge over here, but we are sitting here right at major resistance. This is 4200 big time area resistance here. You also have that FOMC key level 4186.5, which has been a razor sharp level, and the previous quarter's high is this level right there, which is from back here. This is all a zone right here, which could still lead to a big time move up ahead. It could either be through this level for the next resistance level up, which is about 4300, or if we fail through the 4100 level, you start to rotate all the way back across the range into 3850 in the previous year's close. So again, we're still in that phase right now, that mode of range bound action until proven otherwise. We still have an upward bias at the moment, but this is the spot right here where it's going to be curious to see if we fail. If this thing can't rotate out of here and try for a new high here, then any failed high could be a giveaway for a downward move that could be ahead. So are we going to make a move to test the bottom of the trading range? Do we stay right here flat at the middle of the road? This is going to be an interesting area right here. Keep an eye on the edges up ahead. If we take a look here at the NQ, again, the NQ with a significant compression over the last now 18 developing days, I believe. So if you count it back from here all the way, that's about 18 days in that range right there. And that's a significant compression, especially at how compressed it is compared to the averages and compared to history. You have to go back a couple of years to get something this compressed over this amount of time. And right now, that amount of compression could lead to a move that's well over 1,000 points up ahead, likely somewhere between 1,250 and 1,500 points of range. Which way do we go? Again, a failure at the 12,925s will also coincide with the key range failure, and that opens up a clear path back to 12K, maybe even lower. So that gives you a very clear roadmap if you see a transition day through 12,925s. Otherwise, again, like the ES, if for some reason there's a massive rejection here, we're going to be looking higher, and that could push us higher to the next level up. 13,750 would be the next clear short-term level, followed by a continuation toward 14K. All right, let's take a look here at crude oil. Right now, crude oil doing a good job of filling into the gap we mentioned before. Right in here, that if we failed through 81.50 here, it opens up 79 and a shot to go fill the gap at 75.70, and we've seen that play out this entire time. We have gotten very close to filling the gap here, got right back toward year-to-date value, and are currently holding within a range at the moment. Very narrow range for the most part. Again, 66% of average range here today, with $1.26 of range, and it's been averaging $1.91 on a 10-day basis. So fairly quiet on a day-to-day basis, but picking up some steam on a 5-day basis. $2.07 of range is the average at the moment. So given the downswing here, any pullback or failed new high could advance this thing back down to a gap fill and perhaps even a continuation towards 72s as this thing continues to trade within this trading range. All right, taking a look here at gold futures. Gold right here showing some initial signs of rejection. We saw the higher high failure, the big weekly chart rejection, and then last week this thing couldn't get above 2025 and ultimately close the week below 2,000 for the first time in several weeks. So again, early signs of rejection, but we're still holding on to the previous month's close price. Any pullback this week could be a selling opportunity for a continuation down. You're looking at a move down toward 1940, down toward 1915, and maybe all the way back across the range to the previous year's close of 1830. Overall, again, we continue to maintain a very bullish stance in terms of the trend recently, but we are starting to see signs here of failure, and again, any pullback could be a selling opportunity for a swing move down up ahead. Lastly, taking a look at the YM. The YM right now seeing some early rejection at the previous week's low, very much like the ES has bounced here. But this bounce is occurring again within the context of a short-term downtrend. The previous session's high is going to be very important. In both cases, for the ES, the NQ, also the YM again, could be a bullish outside day up briefly. But above the previous session's highs, if there are some significant rejection here early this week, that lower high could lead to the next rotation back down. Again, this thing has been about as bullish as it can get here on a near-term basis. Last week was the first time we saw a series of lower highs and lower lows since this major rejection back in March. And we could still see a continuation toward that edge. That's about 34,500, 34,550. That's the expectation. But again, we'll see, does a pattern of lower highs begin? If so, we could be looking at a pullback toward 33K up ahead. So right now, still strong overall, but it really needs to prove it here pretty soon. I'm going to watch to see how it plays out, the 34K level. All right, that is it for now. We'll see how this develops heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.